Welcome back, everybody, to the show, Be the Trader. Today, I have a very special guest, Aly Angel. Aly Angel is a trader who really focuses on something that I literally would never focus on, which is so exciting because it's something that a lot of people may have questions about. It's fundamentals. She does a lot of research and she's good at it. So I brought her on the show today. So, Aly, welcome to the show.
Thank you. I am so glad to be here. It's exciting. Fundamentals are my thing, and not a lot of people know about it. So it's great to talk about them.
Yeah, I mean, basically, I think I'm probably like the majority of people who only know like, oh, let me look for warrants. Let me look for like convertible notes. Let me look to see if there's any that's our 424 or 425, whatever. Like that's all we really know. But I don't really know what it actually means, right? Like I don't know why. All I know is that I'm looking at this because I'm a short seller, right? There's the potential, like I assume, and I'll probably have this completely wrong. I assume that if there's warrants exercise price at 250, that means there's an opportunity that around that either above 250, people are going to be selling. Like there's an opportunity there. And so sometimes I could be wrong though, because there's probably like certain things that you got to see, which I don't know, which you hopefully you can help shed some light on. So can you let's talk about warrants since we're already on that topic.
Warrants. All right. So warrants are generally added in as a kicker. So you have to take a step back on warrants. When your issuer or company needs to raise capital, generally they'll hire a placement agency, which I refer to as SPAs. You guys see it a lot on Twitter. I'm like, the SPA did this. So you have your placement agents, and because of rules that the issuer or company can't just go randomly find people, they have to know them. It has to be a friends or family connection. So their placement agent is their family or their friend or however they want to word it. So they hire a placement agent and they get an offering set up, and the placement agent's going to get a kicker. Generally, they're going to get a percentage, and then they will get the warrants that once the common shares that they're actually going to sell out to an investor, once those are done, they can get rid of their warrants. Now, there's different timings on those. That's kind of a general. There's always little things they do in between, which is why sometimes the stock will just tank out, and other times it runs to 20 with offerings and purchase price and exercise price that are sitting at $5. So there's a lot of things that go into it, and you have to know all of the intricacies in order to not get squeezed.
Yeah, so
Go ahead.
so for a lot of people who are listening to this and probably myself, so there's gonna be some things you just hit on that I'm just like there's probably a lot of like the audience might not be aware of.
Yep.
And so that is like, for example, let's go from let's just make up a ticker, right? Ticker let's
XYZ.
call it
Really.
XYZ. Yeah, there you go. Thank you for saving me there. So ticker XYZ. Let's say I'm looking at ticker XYZ and it's at $2 a share, and we look up on BAMSEC because BAMSEC is probably the best website, BAMSEC.com. Great website. And then you see that there's warrants, right? Maybe you go to the quarterly report, maybe you go to the yearly report, the most recent report, and you see, you type in your, control F to find, and you might see exercise prices or warrants. When you see those warrants, and you said there's a difference between, like, how do you differentiate? So first off, for people who don't know, if your warrants actually mean, or I don't know what they, okay, so warrants basically,
Do you want me to explain it?
yeah, go ahead and explain it.
All right. So there's a few things that you're going to deal with on any offering. So you've got your common shares, which are common shares. That's what they are. Those can be publicly traded. They're straight across. It's a one for one. And then you're going to have your series, and then you're going to have your convertibles. And with all of that, a lot of times you'll have warrants, which can be used at a later time. And in order to sequence all of that, you literally have to go through your S1s, your S3s, your 424s. We've also got the Form Ds that they've recently started using a lot. Those will be connected to a material definitive agreement, which are an 8K. So when you go through the sequence, I actually use a spreadsheet, and I have all of those set up within it. And I go line by line, starting with the most recent. So if the most recent offering is just common shares, and it says the purchase price is, say, $3, and it's for 10 million as the total offering.
Okay.
Seems pretty straightforward, but then you have your placement agent who is going to get a kicker. So they're going to get X amount of warrants, which they'll say in there that they can use, and they're basically just given those at the 0001 for
Yeah, what the hell does that mean?
it's just a registration.
Okay.
That's what they actually pay to register the shares with the SEC. Not a big deal. So we see those a lot. And then we'll have your convertibles. Convertibles you want to watch out for because those are generally at a later date. And so you want to watch the dates on those. Like one that I was looking at today, they've got like 2 years to use their convertibles. And it's way above the price that they're at. So those can get tricky. And then you have your series. And the series, the farthest out I've seen was a series P, which is bad. So they have your series A, and they just do down the alphabet. So if you get to a stock that has series units or series warrants, and they have that many, you're going to have a lot of work to backtrack and see where all of those prices that they can actually dump the shares are at. So for me, if it's past like series C, I just kind of avoid it just because it's a lot of work. And a lot of times it's not worth going through it.
Okay.
So warrants, think of it as a kicker. Okay, they're the placement agent or the investor are going to get it in addition to, and it's kind of a safety. So you have your safe harbor rules.
But for a trader's point of view, right? For a trader's point of view, it's most people, and I'm included in this, is we see warrants and we're like, okay, that means there's a lot more selling that's going to happen around this price.
Not always.
Okay.
So when you're short selling, and I'm a long trader, I don't short at all. I just don't. I'm long trader. I have a lot of people that don't like that, and honestly, I don't care. I found my niche, and I love playing the game long. So when I'm looking at it, I'm going to see where the exercise prices are for common shares. I'm always going to check the common shares first. Then I'm going to go to the series. Then I'm going to go to convertibles. And then I'm going to see when they can use the actual warrants. A lot of the warrants are under, well, a lot of the shares in general are under Rule 415, which is the delayed offering. It's delayed or continuous offering. So when you have something that's delayed and everybody sees the word offering and runs, the other side of it is these placement agencies and investors are making sure that they're good and they're shorting. Like as soon as we see offering, everybody's like, oh no, and runs like it's an apocalypse. Okay, that was really bad with the current. Disregard that one. But they run away from offerings, and of course the stock drops because it hits a bunch of stop losses. Well, these investors are protecting themselves on the way down.
So they're shorting it.
They're shorting it.
And so, okay.
It is literally a self-fulfilled prophecy, and it's just because people don't understand the offering. A stock can't move without an offering. If there's no offerings open, it's not going to do anything. It's going to be boring unless they're using a bank, and that's a whole different funness. But for the purpose of what we're doing, we want offerings in place. Offerings are good because they move the stock. I know it's like
they're great for short sellers. I mean, for me.
For you also, because all right, so what started me in all of this in Gratani's video, he talks about if I could find what makes these move beforehand, I could play them both ways. And I was like, well, why can't we? So at that point, I started doing the research, talked to Michael Good about filings, and he kind of got me started on just basic things to check out. And he knew me well enough. He knows I'm a researcher, and he knew I'd find stuff. So he's like, here you go, try this. So I did. And that's how I started finding the patterns. And once you find the patterns, it's like a whole new world opens up. And there's different keywords that you can search for within the filings that bring up different things. Have you finished my guide yet?
No, I haven't. Because it's just not me. It's just not me.
Yeah, no, it's over 10 hours. I totally understand. But in the guide, I go through step by step the rules that these companies have to follow. Because so many times I've watched things happen, like it shouldn't be going long or it shouldn't be falling. What rules are making this happen? And there are rules that make other rules legal. It's really weird. So many times I'm like, how is this legal? How can they do this? But the manipulation is real, and it's all based on rules from NASDAQ and the SEC.
So what are some things that we can, because we're getting way deep
Yeah, I
to
know we
where
I
to
know.
where I have no idea where we are. So I'm gonna be
Okay.
honest with you. I want to make sure like what can we do to rein it back, make it simple, keep it simple, stupid. And I know you can't really do that in terms of the grand scheme, but if we can, if people can get some value of listening to this, and what could be like an easy like, okay, this is what this means, here's what people think this means, and this is not what it means, but is there some easy simplistic kind of point of view there at all that can be explained?
Yeah. All right. First things you want to check for, exercise price. So in BAMSEC, how it has a little search window,
Yep.
exercise. Pull it up. The most recent filings, look in those. A lot of them will have prices. Those
Yep.
are not the prices that you want to be shorting at. But on the long side, those are the prices you want to be getting out at to be safe. Okay.
Okay. Okay.
There's a little gap in there. The reason for that is a lot of the placement agencies and investors will go 10 to 15% above at a minimum, whatever that exercise
So
price
they
is.
can make some money.
They make the money. Yeah.
Right.
If they're right at break even, say their purchase price is $4, their exercise price is $4. Cool. Like,
Yeah,
they're
why
not,
would they do that?
I always use the example, if they buy it at 99 cents and sell it at 99 cents, who cares? Like, they made nothing. So there's always going to be that little bit of leeway above. So if you see an exercise price at, say, $4, do not short it at $4. Wait for it to confirm, see where it's going. What I've seen recently, and this is it was the boring market the last half of the year. So many people look at those exercise prices and just try to crush them shorting, but the placement agencies don't care. Your little volume is not going to matter when they're running their algorithms and it's just churning all the way up. So you can tell when they're starting to pull back based on basically how the tape is running. So hopefully people know how to read the tape. It's one of those things you have to know how to do.
Yes.
So reading the tape is a huge thing. When it starts to pull back and confirm that it's going to fail, cool. Yeah, definitely get in. I would never do it on a first screen day, just because a lot of these run more than one day, depending on the placement agency. So if there's not an exercise price in there, you look for purchase price. So purchase price or offering price, either one, they're basically the same thing. And then you have kind of a baseline of where they paid for it.
Wait, purchase price and offering price are basically the same thing,
They can,
or is exercise price separate from those two?
they're separate.
Okay, 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 cool.
So they'll put out the one that I hate. This is the one filing I despise. They'll put out a free writing prospectus, and they say our offering price is $3 for 1,000,000 shares, and we want to make X amount on it. It'd be 3 million or just over on it. So that's their purchase price. If there's no exercise price, they can technically sell those back at whatever price. It doesn't matter. So the investor can sell it back in for whatever, but they're not going to sell it for less than they bought it for.
Right.
Those are the things you have to look for. Now, if there isn't, they will normally have an offering price, but a lot of times they'll have an offering price and then a purchase price, which is just a few cents difference. And that has to do with fees and things like that with the issuer, so company, placement agent, to the investors. So if you don't have an exercise price, offering and purchase price is your friend.
Okay.
Always search for exercise price though. And remember, you've got that leeway above it.
So it's crazy that you're a long bias trader, and you search for these warrants to buy them. Like you buy before it's just, and I don't know your strategy, right? I don't know how you trade. That's what's so unique. Like everyone trades different. That's what I love about meeting all these traders, going through this process, and someone might hear you talking and be like, I love this, like it's just like for me, it's something that's I'm not a researcher, and I've just never been, but I am very intrigued of how you love this so much that I was shocked that you like looking for warrants, you like looking for all of these convertible notes and purchasing price and everything we're talking about because you like to long them, and which is so different to me because there's the other strategies where people who are long bias as well that you look up this same stuff so that way they're not long in these. So it's just completely different. And so I'm trying to understand, like, why is this beneficial for a long bias trader?
been very, very beneficial for me. There's a cycle, and I know you're on Twitter with me also, but the non-compliance cycle that is in specifically NASDAQ capital markets. So I like the zombie survival mode, where if they get delisted, they go to OTC land. And there's a very specific set of rules that they have to follow, and they don't follow those rules, and bye. So they're done. They have the extensions. My favorite, honestly, is the ones that are both non-compliant under $1, and they have either a shareholder equity deficiency or MVLS, which it's the same rule, but it just depends on how they list it. A lot of them are sneaky with that. They'll be like, oh, we're MVLS non-compliant, and then they pull a shareholder equity pop and drop. And so we're always watching for both ways and ready for anything. Now, the way to play those is know their timeframes. So know when they're having to regain compliance, know what their options are. Like right now, we've got a lot of them that we're watching that are under $1 that are regaining compliance without a reverse split. They start at like 40, 60 cents, whatever, and they just walk them up and then take 10 days over that dollar and they're back good. So my research team has actually started tracking those to get actual statistics. I'm all about statistics. They don't lie. And then it's not an opinion. I don't throwing opinions around. Like, this is how it is. Here you go. These are their options. It's my thing.
Yeah, absolutely.
When you have the statistics, it's so much easier to be like, okay, 7 out of 10 of them, and this is just a throw out there example, but 7 out of 10 of them from 60 cents, which isn't actually a number, I'm just throwing it out, but from whatever cents are going to make it over $1 if they have shareholder meetings out this far and they did a reverse over here. So we've got a lot of different things that we track, but currently we've got 17 that we've tracked in the last 3 months that have regained compliance organically. So we're like, all right, is this a new trend or is this a new actual play? Like, how is this going to hold?
Yeah.
There's a lot of different things within the non-compliance that you can do. It's not just, everybody for the longest time was like, oh, it's just reverse splits. No.
Yes. For a while there, the whole Rolling Wolf came out with all that reverse split. Not, it kept on. Everyone was talking about it, and so everyone jumped on that trend, and then that's kind of faded away. It's kind of faded away.
Well, that's kind of the cycle also. So reverse splits actually are going to run between like February and the end of June. That's just the nature of the beast. Most of them are biotechs because we've got all of these biotech conferences that are coming up. Like the first one's the middle of February, and then we have one in March, one in April. I think there's a couple in May. I've got a calendar somewhere that has them. And if you look around,
of course you do.
Absolutely. It's on my wall. I have a huge calendar on my wall. It's just my thing. But if you look around these biotechs moving and the conferences and everything else going on, they're trying to get attention. It's what they're doing. If they're under like $5, the institutional investors are like, cool, next. So they want to try to be at certain ranges. And if you have the background and you've tracked all of it, it's really easy just to know what they're going to do or what they need. Not what they're going to do, what they need to do. Totally different on that one. But that's why we use stop losses also. If we know what they need to do and then they're like, oh, just kidding, we failed. Cool, you have a stop loss, you're out. No harm. So cycle, reverse split, and then when Roland put everything out, he and I have had so many conversations about this. When he and I talked originally, he was like, I'm going to track it because I think I messed it up. And so he did. He tracked it, and the actual play has changed. A lot of people now think that the reverse split cycle is that first 10 days where they're regaining compliance, and it's not. Ooh, I just told a secret. It's okay. Yeah. It needs to get out because it's driving me crazy with everybody messing it up. So we have all of these chat rooms thinking that it's the first 10 days. So they're pumping these where they used to split, go basically down to $1, and then they would have a news pop day 9 or 10
and then boom
themselves. Yeah. That was before Roland's, guide. Now everybody's like, ooh, it's a reverse split. Let's jump on it. And it's jacked up that first little spot. But there are other plays within it. As long as they're low float, we call it the reverse split cycle because they reverse split, they regain compliance. While it's still low, these placement agencies are in the background getting the offerings in place. They have a delayed offering, which is Rule 415, and they cannot start using them for a certain amount of time. Based on the legend, a lot of things that go into this. So all rules, SEC and NASDAQ. So we have the offering. in place. And then basically when everybody forgets about it, people that get stuck in it from the 10 days, kind of give up, everybody starts cutting. That's normally when they'll run them. And everybody's like, oh, we didn't know. It's like out of nowhere. Well, no, it's really not out of nowhere. And most of the time, my group that I trade with, we've already built a position. And when everybody else is jumping into that first pop, that's where we're selling. So thanks, guys. Like, I appreciate you, but we're already prepared. But that does take a lot of research to get
It does. Yeah. I got hats off to you because when I was watching, when I was just reading about what you've been doing, when I see you on Twitter, when I see you in your chat, and I'm just like, I'm like, you can have it. I'm like, you know what? It's crazy because like everyone has their own niche. So I'm not knocking your strategy because you do well in your strategy. You have a lot of people who actually do the exact same thing and they find their success. It's just nice to see that if you're a research person, this might be for you, right? And so what's crazy is, so speaking of research, I want to know from your perspective, when you start finding your own success, right? What any tips out there for people who are like working on their own trading right now and they're like, okay, because I get messages all the time like, hey Alex, how do I track, how do I know what works, how do I determine what do I need to track, do I need to track this? And it's a question that's commonly asked, and so I'm just curious from your perspective, since you're more into the research kind of realm, what your thought is on that question of like, how can I find my own success? And based off my own kind of research, what should I actually research or track in terms of like Excel and so forth?
All right. So when I started, I realized very, very quickly that I got anxiety from the get in, get out trades. Obviously, PDT rule when you first start, which
Oh
I
yeah.
hate. I hate it because it breeds so many bad habits. I talk to friends that I have in other countries, Canada. They don't have the same issues that we have as far as the habits because they don't have to deal with PDT. They have no issue just cutting and getting back in, where we do because we're afraid to like lose that day trade. So I realized very quickly I needed to be a swing trader. I could not do the in and out. So when I started tracking my own trades, I found a lot of the notes that I was making was how I felt at that time. And for me, that might be my psychology degrees, but how do I feel right now going in this trade? And then I would build a thesis. And
Yep.
what do I think it's going to do? And it wasn't just one thesis, it was multiple. Like, what can this do? What are the factors that can make it run? What are the factors that can make it crash? So in my spreadsheets that I tracked my trades, it was obviously my in, my out, what it did during the time that I was watching it. Most of them are overnight. So what's the percentage of actual ones that move in the morning? What's the failure? Most of my trades that I hold overnight, I'm out of pre-market. I don't deal with the morning panic. I still get anxiety with that, even if I'm not in. And I'm like, oh, here's the morning panic. That's just me. So if you are high intensity and high anxiety, I do not recommend doing the trade like a sniper thing because it's scary and it's going to cause health problems. So the very first thing I tell people when they start, like brand new start trading and they talk to me is, how do you handle anxiety? And I've gotten the what look a lot, like, really, that's a question? And then I explain why. I give them my example and they're like, oh, okay, and they think about that. There are so many different plays that you can do that are low anxiety. So what I told a lot of people recently is, pick somebody that you feel is successful, track their trades and track their setups, know the setups, get familiar with the setups. Like one of our guys loves overextended gap downs and he's amazing at them. And he started doing options with overextended gap downs, like whole new world. But it's low key for him and it's, basically no anxiety. He has the time frames. And so what he did is, now I'm just going to throw names out, it's fine. He actually started tracking all of Huddy's trades because Huddy does the overextended gap down.
That's what he does.
Yep. And so he started tracking all of them and he built his stats around Huddy's successful trades. And then he went through all of Huddy's unsuccessful trades to learn what not to do. So for me, it was a little different because nobody does what I do. I had to build my own. But pick somebody that you think is successful and you think is doing a good job and is honest about things. That's another huge thing. We see a lot of furs that are like, oh, I'm here and I'm here and I'm all over, and decide, okay, can I trust that person? And can I trade like that? As far as what I track, for every single trade of mine, I'm going to have a spreadsheet. So it's got what the stock has done within the last 6 months, all of the offerings, all of the warrants, all of the everything the placement agents have done,
Yep.
what rules they've been deficient on, because that's what I do. What or how long it took them to regain compliance. How many times have they done reverse splits? How many times have they been non-compliant? So I have all of these factors that I do for mine. Now, people that I'm training to do this right now, I'm pulling it back to the basics. So it's, okay, you're interested in this stock, find the resistance, find the support. Figure out what play it is, build your thesis. The thesis to me is one of the biggest things, especially when you're a brand new trader. And don't just stop at one thesis. Like, okay, it can do this. Cool, but there's a 50-50 that's wrong. It's actually less than a 50-50. Have another thesis. Okay, well, what happens if that fails? So have several of them. And I was actually talking about this in my webinar today on the psychology side. So have several different theses that can be potentials, because we all know they have a million potentials they can do. Whichever one you choose to play, circle it. If it fails, put Y. Go to the next. I'm very against revenge trading. I don't revenge trade. If I stop out, I reassess what's going on. I go through everything. I look at my notes. I look at what my thesis was, and I look at other theses that I had, because it might be a different time frame. That's another thing that I've started to teach with my group is time frames. You may be dead wrong right here, but if you look at a bigger time frame, you might be dead right. So different time frames have different abilities with the stock. Auspex is actually one that is a great person to read about time frames. Like, you might be wrong here, and you may have followed me in, but my time frame is always going to be different than yours. So you have to think about those things also. As far as tracking, every single trade you do, you need to put how you feel.
Why do you think that's important? The feel part.
No matter how much we try to subdue how we feel, we're human, and we're emotional creatures. That's just nature of the beast. We go through something traumatic, like a big loss, and that sticks with us.
Oh, yeah.
With those, like for me, my biggest loss to date was Blink, BLNK, and it happened to be a short. It was one of the 3 shorts I've done. I cannot play BLNK long, and I've tried. Can't do it. So we get these little things in our head that stick with us. So the psychology side of it, if you can understand how you're feeling and how you're being either reactive or responsive in a trade, you can adjust it. If you're being reactive, you shouldn't be in it. If you're being responsive and you have a plan and you know what you're doing or what you're planning to do, and how you're going to react at every step, you're good to go, as long as you follow it. I've talked to a couple people recently that are like, oh yeah, I'll put a stop loss in, but then I'll take it out and then it goes against me. I'm like, why?
I'm like, why do you even put it there? Why do you even put it there?
Just leave it. It's fine.
It makes no sense.
Yeah.
You know what? But I've been there. I've been there, and it's But you know what? But I want to know, because you said something about put how you feel before you enter the trade.
Yep.
And then I'm guessing you put how you feel after, right?
Yep.
Yeah. And then I guess you can look at it, and then when you look at it, you can obviously see, okay, I'm out of the zone. I'm out of the right frame of mindset. So I think that's great advice. I'm curious, just from your perspective and what you're dealing with on a day-to-day basis. What is something that you feel like used to be very hard for you, right? That used to be something that was like, God, I'm never going to be able to get this, whatever it was, right? For me, it was, I could never get rid of the cycle of, I was always in this cycle for the longest time where I would revenge trade. I would do well for like 3-4 months and then take one loss and then have an ego and then take multiple losses after that, just because I didn't think I should lose, right? So that was my problem that I was finally able to overcome. Like, what is something like that for you that you're like, holy crap, like I didn't think I could ever get over this. I need to get over this to be profitable.
So with
market data connection reestablished.
I'm guessing that's mine. Hang on one second. Love IB, it randomly opens itself. All right. So when I first started, I was using very small size. I started out with a $1,500 account and super small size. And as it grew, I kept with the same size. I mentally could not add more shares. And I think that had to do with my risk, and I was afraid to lose. I'm actually doing pretty well now. But when I first started, I found out that I had a lot of psychological baggage that I was holding. And that was showing in my trades. And I
Can you
had,
share just so it can might help someone else? Anything specific, like, because that's very vague.
it is very vague. So
Or give an idea. You don't have to share yours, but you can
no,
share like an idea.
an example that I actually get a lot.
Okay.
And I kind of joke about it, but it's something that you have to keep lighthearted because most people have issues. So a lot of us have separation anxiety, and it is basically the fear of loss. And when we're kids, a lot of parents work, so we're not around them a lot. We're trying to get attention as kids, and if you don't get into healthy relationships as you become an adult, you don't have the healthy friendships, you don't have a healthy SO unit that you can go to. Your significant other, I just totally use it whatever term. So yeah, if you don't have a healthy significant other relationship, you're gonna be basically trying to sabotage yourself without knowing it in the market. A lot of people want to hold and hope, and that can be directly traced to mommy or daddy issues. Like one parent was not present in early childhood, and that's just a straight across psychological thing. And even with that, it's kind of nothing with the market itself. It's you want things to work for you, and you want to hold on to it, and you don't want to lose it.
Yeah.
So the hold and hope strategy, out of the people that I've talked to, majority of them, when you hold and hope, mommy or daddy was not there as a child, divorce situation type things.
Okay.
So with me, similar, but not exactly the same situation. So with me, when I first started, I was okay losing a little bit, but in order to size up, I had to adjust my risk, and I refused to do that. So it was one of the, whatever, I'm just going to come out and say it. So I grew up in a poor household. A lot of us did. My mom did the absolute best that she could, but she also taught me to be very, very frugal with things and, couponing and all of this stuff. So to me, money is a huge factor that you have to, be careful with, because if you lose it, you lose it, especially in this market right now. So for me, the thought of taking 100 shares versus 500 shares with a 5-cent risk on 500 or on 100 shares to 500 shares, I have now sent my risk from 5% to 25%. I'm not okay with that. Or I guess it'd be 20%. So when I'm looking at my risk now, I have very specific 3 cents. That's it. I actually build it in a Webull. So I have 3-cent automatic for every single trade, and then I have a maximum of $100 loss. So thinking about 2 years ago when I started, and I'm trading with 100 shares that are $2 versus now I'm trading with 1,000 shares that are $2, and I still have that 3 cents or $100 risk on my trade.
Yeah.
I have gone through the motions to get to that point, but I didn't start trading with size until like the middle of last summer. So I'd already been trading a year and a half before I was able to size up over like 500 shares.
Right.
I find a lot of people do that also just because they don't understand their own risk and they don't understand how to adjust their risk. For me, it was just trial and error. And if you're not comfortable with your own risking money, trial and error, paper trade. I get so much backlash with the paper trading. But even now, like if I'm busy, I'm doing something and I know I can't commit to watch this ticker, I will paper trade it. All brokers have it. You switch it over live to paper, go in, and then, hey, I still have my stats. So I know that next time this happens, there you go.
I think people get that way only because I think paper trading works. I think it works only if, from my perspective, it's my opinion, if you're someone like you or me who did real money first and you've experienced it and you know exactly how you feel, how you make decisions. And so, and you have discipline, because once you find consistency, right, you have discipline, because if you don't have consistency, you're not disciplined. So Now, if you place a paper trade, you can actually have discipline, say, I actually placed it here and I took a loss here. Instead of like a lot of people, they'll just kind of be like, yeah, I took a paper trade here and then or whatever. Like it's
Yeah.
a big difference. It's a big
I,
difference.
I still have a lot of people who are like, oh, I did a paper trade that I forgot about from a week ago. I'm up like $7 million.
Yeah. Yeah, so you got to take it serious, and I think that's important, or write it down and write down what you're going to do, the whole plan, so that way you can't erase that. You're there. But how did you take the step to start growing the size, the risk?
50 shares at a time.
Yeah, no, no, no,
I'm
that's
not kidding.
great. Yeah.
It was literally 50 shares at a time that I did. And the first time, the group that I was in at the time, the first time I did 500 shares, the stock, I was holding it overnight. And this is back before I had the risk that I had. So I'm like 500 shares and I'm like $130 negative on this position because I was building a position and I got in early and I didn't have all the stats I have now. So it was, yeah, it was a ticker that ran a lot last year. So I'm sitting at like $9. I'm out walking Victor and I get an alert that it sells at 11. So I have 500 shares that I just sold from $9, like 902, sold it at 11. I had my order already set.
Yeah.
So I just made $1,000, right? Is that right? No, there's no way. So I get back, like we're right at the end of the block. So I'm like, all right, buddy, we're gonna run. So we get back, come in. The chat room is just blowing up. My phone's going crazy, and they're like, "Where was your entry?" And I'm like, "So I'm out." Well, it came back down to the sevens, and I ended up buying again, same 500 shares at 750. And it went up to 9. And I almost sold at 9. And of course, at that point, I was still like, oh, peer pressure. Everyone's like, no, it's going to go. It's going to go. And it did. So it went back up to 11. Ended up going up to 13 for the day. But I'm like, all right, 11's that's like my thing for the day. I'm out of it. So on 500 shares and just back and forth. And that was my moment that I was like, okay, I can do this. And that was also when I realized the range of the cycle with these non-compliance, because they can really move. Now we see a lot of pop and drops just because so many people are preloading on it. So the actual preloading that I used to do doesn't work the same anymore. I have to really stagger it. But when I got to that point, that was my, okay, cool. And then the first time I did it, like I worked it up from there from 50s. And then the first time I did 1,000, everybody in my group was just like, what? You had 1,000? That's awesome. And they were like so proud of me. And I'm like, I feel like I'm 5. That's cool right now. Really
You know what's great though, what you said is number one, I love it you shared you did 50 shares at a time, right? Because that progression, it's so important. Because like for me, like I'm growing mine slowly now, my size. And what's crazy is like your ego says one thing, and then like your gut says, no, you should do this, but then you choose the ego and then you blow up. So I love that you said that because it shows that take your time. It's a marathon, not a sprint. Slowly grow. You got that anxiety is real and you can make bad decisions. But the other thing that you said, and you mentioned this a couple of times during this whole chat, and that is you kept on mentioning like it used to do this, but now I have to adjust this. It used to do this, and now I adjust this. You're very flexible and you're always adapting. And so you always hear people say, have a strategy and stick to it. And what's unique is like over time strategies do change. And I do stick to only like a couple of strategies and they work a lot. But if you stick to a couple of strategies, you start to see that they do change and then you have to adapt with them. So it's interesting that you say that because I think until you stick with something that you won't see that things are changing. And so it's just clear. I mean, you're a great example of how it doesn't phase you. You're like, oh, this is changing a little bit. I got to do this now because you see it every day that you can obviously see when the kids walks across the street every day and he's always wearing a yellow backpack. And then one day he's not walking across the street. You're like, where's that kid?
Mm-hmm.
You see a difference. And that's what's so important with sticking to, one or, a couple of strategies and then learning the actual strategy. But let me ask you something else, Aly, and then gotta let you go because I'm gonna keep you here forever. What is if you could go back in time and you could literally go back to right when you signed up and started trading, right? What What would you tell yourself to do or to whatever? Like if you could say one thing, like you could have one full sentence to help yourself out, what would you say?
Don't short. Don't even try it. There.
Don't short. Is that what you said?
Don't start. Don't start. It's funny. My biggest losses were like I've shorted 3 times, and they're my biggest losses. And it was just I was trying it out, and I mean, literally 100 shares and a $700 loss. Not even kidding. Yeah, I walked away from the computer. Don't do that. Yeah, I walked away from the computer and I didn't have a stop loss in, and it was fading the whole day. I figured I was fine. Nope, it reversed. So yeah, aside from that, like this shorting, in reality, if I hadn't done that, I wouldn't be where I am now. There's not a lot I would change. I mean, I have people ask me all the time, like, would you join Sykes Challenge again because it costs so much money? Yeah, because it's opened every single opportunity for me that I've had. If I hadn't met that specific group and had people that saw my worth and saw my ambition, what was the one used last week? My stubbornness, I wouldn't be where I am. And now I wouldn't be able to help people that need to be able to save time. Like for me, I was working at the gym and I had school. Like that was my life. It's maybe, 25 hours a week on my time. And so many people have these full-time jobs. So if I can take everything that I've done over the last 2 years and put it into basically a bite-sized pieces to teach other people and save them time, to me, that's the best reward that I can do. Though I also am the person that volunteers and everything. Like I like helping people and animals. But I wouldn't change much to go back to. I know, tangent.
Yeah. No, you're good. You're good.
But yeah, no, I honestly, I wouldn't change much. I would definitely have not been a butthead to Huddy and actually got to see through that one because I think knowing him a little bit sooner may have helped me a little bit differently. But even with that, like he's the exact opposite of me. And he tells me every time I see him, he's like, I wouldn't be able to do what you do because I don't care. I short it when you're out. It's fine. But that yin and yang that I've met with so many different people, that's what's made me where I'm at. Got me where I'm at.
Cool. Well, look, Aly, I appreciate you joining me today and giving us some kind of behind the curtain of what it is to be a researcher and understand all the I can't even fill on all the blanks, warrants, convertible notes, all of that, S3, S1, all of that.
Mm-hmm.
It's so, all I gotta say is thank you again for joining us and thank you for giving us some insight on that and sharing a little bit about what has made you successful, because I know especially some of those little tidbits about growing slowly and all of that's so valuable. I know that can help a lot of people. So thanks a lot for being here.
Thank you, Alex. It's been fun.